Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Tuesday, March the 15th, 2011. Well, a continuation of the trend to the downside today. We can see this very large ranging body. The range is the distance between the high and the low. We have a very large range on this candle. We actually have a very small body at the top of the candle, a red body, which means that the sellers made net bearish progress. But we have a very long shadow on the bottom of this candle. And that highlights the fact that the sellers, even though the trend is down, the sellers actually lost commitment as the market was trading down around these levels, and they weren't able to maintain this market at lower levels. With the market closing up above the midpoint level, it tells us the buyers have actually taken control of this market. So that could be fairly significant for a potential change of trend in the next trading day. Now, on the previous trading day, we saw that the buyers also took control of the market by closing up above the midpoint level, but not very strong control. And we actually saw the market find support at the top of the cloud. However, today that support totally evaporated, and the market traded down into the cloud to become a neutral market in Ichimoku charts terms, in big picture terms. So when the market closes within the cloud, we have a neutral market, and neither bullish nor bearish market. Now, we actually had the breakout from the symmetrical triangle that we've been talking about for quite a few days, and we saw that the market was trending up very strongly previously, and we saw the market form this triangle type pattern. We were waiting for a breakout and resolution in either direction. We saw that resolution when the market broke out a few days ago with this very bearish candle. That very bearish candle was a sell signal in terms of the symmetrical triangle, and we had a target which was the distance from between the two boundaries of the pattern projected down from the area where the market broke out from, and that target was down around 12.53, 12.54. The market did its best to trade down to that level. The market actually traded down to 12.61, but found the support around this 12.65 area too strong, and at this previous area of support in this previous rectangle pattern where the market found support and buying coming in. So we've almost achieved that target, and that symmetrical triangle has turned out to be a good indication of the potential bearishness in this market when we sort of break out to the downside a few days ago. If you recall, we were waiting for resolution for this market to resolve the issues that the market had trading within this congestion area, and we had seen that over the previous few days. Now, the market is also trading down below the Kijun-sen and Tenkan-sen, which means that even though the market's neutral in big picture terms, the market is actually bearish in the medium-term time frame by trading below the Kijun-sen, the pink line, and bearish in the fast-term time frame by trading down below the Tenkan-sen, the green line. If the market does rally, and there is a chance of that happening, because of the short-term dynamics in for this final day of trading, that the market is not supporting the trend to the downside, with the bulls taking control of this market in the later hours of trading, with the sellers losing commitment. So we do need to watch the high of the current candle, which coincides with the top of the cloud. So if you do get a breakout up above the cloud, then there is potential for this market to rally. If the market does rally, we have potential resistance at the 1300 round number level, where we saw previous support and resistance, and then certainly at the Kijun-sen and Tenkan-sen, which are trading around that level, just a couple of points either side of it. If the market does continue to rally through there, then there is potential support at some of these swing lows, only minor levels, I think, once again around 1302, 1304, but then certainly up around the 1313 area we have potential resistance. Now, if the market does continue trending down, then obviously we do need to watch this area around 1265, and certainly at the low of the current candle, which is 1261, and coincides with this support offered by the previous rectangle pattern. If the market continues trending down and does take out those areas of support, there is potential support around 1250, where we have the bottom of the cloud, and below there no support until we trade down to around 1219. So an interesting market in terms of the short-term dynamics not supporting the trend to the downside, the buyers coming back in. The sellers aren't really showing too much strength anymore, but overall the trend is down. We need to believe as technical analysts that the trend will continue to the downside unless we have other evidence, and that evidence would be a higher high and a higher low. So that's what makes the high of the current candle very, very important for this market over the next trading day.